like to hear your take on the streaming war, which is definitely heating up. We saw Disney results and we saw Netflix results, and it looks that the streaming boom that defined Hollywood during the COVID-19 is slowing down, or at least for now. What's your take?
Yeah, it's a streaming arms race, right? And we've seen that Disney has obviously had a huge step in terms of what they made in terms of progress during the pandemic. But you'll start to see that moderate, and that's what we're seeing. But also that's going to be more of an arms race trying to get market share internationally, especially, of course, not with Netflix just top of the heap, but you got Disney, you got all these other sort of fragmented players coming out, and I think that is ultimately going to be more competition going forward, and that's what the street's looking at. They're looking at not necessarily this quarter, but on the other side of the horizon.
So do you think it might be able to compete with Netflix in the medium to long term, because it has pretty ambitious targets from what we saw? In terms of subscribers, of course.
Well, Disney has come out of the gate just robust. And of course, if you look at COVID, it's given them a huge lift that no one ever thought. But, I mean, they're basically 3 years ahead of their targets. And I think that's, from a content perspective, the first one that could really compete with Netflix, and it's shaken up the competitive landscape.
So another hot topic is definitely Elon Musk and everything he brings to cryptocurrencies, specifically to the Bitcoin. I just wanted to show you very quickly his final tweets, of course, in regards to the Dogecoin. But first of all, of course, let's get back very quickly to the cryptocurrencies. The CEO made a surprise announcement that his electric car firm would stop accepting Bitcoin as payment due to concerns over its environmental impact. So then what I wonder, of course, it had a major impact on the Bitcoin in the past 48 hours. So I was wondering, wasn't he, how can I say, aware of the environmental impact previously? Because it's too surprising. I mean, I was aware of it. Everyone was.
It's like me going into a pizza place and being surprised that there's sauce and cheese on the slice of pizza. And I think that, look, that's the frustration. Because that didn't change in the last 3 months in terms of nature of crypto mining. You know, and this has really been a very frustrating situation for crypto investors. I mean, Musk is the biggest proponent of crypto, and for 3 months to sort of do a U-turn on transactions, it's been not just confusing, I think frustrating among many, and I think it's also added to the noise in the Tesla story. At a time where risk assets are being sold in a surge of selling inflation worries, it's not what investors want to see. With this sideshow that's now really started to overshadow the story.
So currently the Bitcoin is trading at about $50. So if it was supposed to get below this level, which is extremely important level, do you believe there might be any kind of impact on Tesla? Because we saw in the final quarter that thanks to the Bitcoin, there was a huge, or at least significant impact on the top and bottom line.
Yeah, I mean, if you think about the Bitcoin, $1.5 billion that they bought, I mean, they made more profit on Bitcoin than they did selling cars last year. So, you know, I think what you're starting to see here is just more and more focus on the core EV market with Tesla, you know, especially with Bitcoin now sort of in a standstill in terms of what we're seeing from a Tesla situation.
I was wondering, are you still so bullish on the tech sector, FANGs, and of course Tesla included, after the inflation data, the PPI and the CPI? Do you think there is going to be a huge impact in the medium to long term? We do see still the Nasdaq up about 2.84% year to date, which is certainly extremely positive, but it lost a lot of space in the past few days.
No doubt. I mean, look, you've seen a risk-off, inflation worries. And obviously, this has been a painful sell-off, and I think it's hit at an accelerated pace that I think it's caught many off guard. But our bullish thesis on tech, you know, which has really been the last decade, we still believe this is in the middle innings of playing out in terms of the transformation, in terms of $2 trillion of the digital transformation, in terms of playing cloud, cybersecurity, FANG. I still think these multiples start to re-rate on the other side. I think tech's up second half of the year 15%. You know, to us, this is not the time to throw in the white towel. It's our view that we're still in the middle innings of a massive bull rally for tech. No doubt this has been a bit of a white knuckle period, but we continue to be steadfastly bullish on tech, despite obviously a lot of the skeptics heading for the elevators.
So do you agree with Cathie Wood? I mean, so you think alike, despite, by the way, ARK investment have fallen, I believe, or has fallen at least 15% around.
Look, I mean, when Tesla is up 700%, right? Everyone's drinking champagne, thinking they're the best stock picker. When all of a sudden it's down, 20%. I mean, that's really what rubber meets the road, right? And I think, you're going to see enhanced volatility here in tech, and that's what we're seeing. But when I look at the growth, some could argue, okay, multiples are well above historical norms. Look, our valuations in tech grew 50% plus last year, but they've contracted about 37% so far this year. But growth is 3 to 4x of what we've ever seen. So that's why I continue to view, someone that's covered tech since late 90s, the transformational growth that we're seeing is unparalleled. So I don't, because we're going through this inflationary period, view it as this is the time where the tech bull story ends.
All right, this is very interesting. Thank you very much, Dan Ives, Managing Director, Equity Research, Wedbush Securities. Have a great weekend, Dan.
You too.